Welcome to another episode, Shirley Lou, Focus in Finance. And you know what? I'm so excited for this particular episode because, right before I got on this show, it's so funny. There was a gentleman came to me and he goes, okay, Shirley, some of the episodes you're talking about where I give you money and if I don't die or something happened to me in those period of time, I get nothing on some of the stuff you're offering to people and educate folks out there. I said, yeah. He goes, oh, no. He said, yeah, no. Some of the stuff you're telling me that if I give you money, your company or whatever company you represent working with, after a certain amount of years, after 20 years, I gave you X dollar amount, I get nothing. I go, yeah. Okay, so how did that conversation come about? Okay, it's kind of fun right now. So what I was referring to was one of the episodes I talked about the different kind of insurance, life insurance, particularly for business owner and individual. Okay, so I want to clarify what I said by you get nothing, you get some, and some you do, and some you don't. So let's start basic fundamental. Okay, I talked about, whether you're a business owner or you don't have a business and you got family. Let's make that basic day one. You're a human being. I know three things can happen to you guys. You're either gonna kick the bucket early, you die too soon, or you're gonna live too long, right? Or you're gonna need money, or you're gonna get sick. If any one of you disagree with me, let me know, because I think those are four components in life that's gonna happen to you and I, regardless, wherever we are. So the very first basic fundamental is when, a company that wants to buy insurance, protect the key man folks, or you yourself have a family that you want to protect, right? So let's talk about very basic term insurance. So life insurance comes different flavor, different benefits, different prices. It's kind of like you go buy a bicycle, okay? A bicycle, I call it similar to what's called term insurance, where basically, okay, this bicycle is very cheap. You can buy a bike for $100, $200, $300, very, very cheap. And this bicycle is going to get you point A to point B. Now, a bicycle can only take you so far. And I call that basically my analogy, kind of like term insurance. It's called temporary. You can pay 5 annual payment, annual renewable. I mean, the cost goes up every single year. It's very cheap. You can buy, $100,000, $200,000 for a couple dollars. And then you got the next level of grade up where you think, well, you know what, Shirley, I think I'm living longer than annual every year. How about a 10-year term? So a 10-year, instead of paying, $5 maybe for a 10-year term, you pay $10, right? It's more expensive, $5 more, correct? But it's still reasonable price. But then this is going 10 years, which basically means your lockdown rate in 10 years. So this bicycle, we're gonna say, hey, you know what, bud, this bike right here that you bought, this bike probably gonna last you next 10 years that you can drive around or ride around. But by the way, this bike can only let you ride around the city, okay? Because you're gonna have to pedal, okay? You're gonna have to work at it. You can't go across the country with a bike, okay? Not a bicycle anyway. And then you say, well, what, do you have another bicycle that's a little better? That gives me maybe electric bike or something like that? Oh, you want an electric bike? Okay, so that electric bike, maybe cost you $40 a month. More than $5. Remember that, because you're upgrading your bike now, right? Even just term insurance alone, it's got different choices that you can make. So in this case, I gave you a electric bike. Oh, it can go a little further. Oh, rather than just down the street going, I can go, maybe I'm in Virginia right now, maybe I can take the electric bike, ride it to Maryland. I'm still okay, right? But you still can't go across country, or you can't go long distance trip otherwise, So with that being said, so the pricing on those kind of things is called cheap, temporarily, and you pay for those things that service at that time. So those kind of term policy, you have what it's called, basically you're giving money in exchange, for a benefit that if you happens, if your bike breaks down within 5 years, I'll pay you. If it breaks down 20 years, I'll pay you for what you pay for the bike, or a benefit you get with it. But if it's longer than 20 years, you don't get anything. So when someone said to me, well, how come I gave you, all that money for that thing, and I don't get anything back? Well, that's because you pay for it for a temporary of insurance. I, as an insurance company, agree that if you die within those 10, 15, 20-year period, I will pay your family. It's a benefit. But if you live longer than 20 years, then the contract ends. You and I don't have any obligation. You pay me, I took a risk on you. You're betting me that, you're 18 years old. On a 20-year term, you're betting on me that you're going to die by age 38. And I'm saying to you, no, I think you're going to live longer. But guess what? Every one of you out there go to work and you're betting on that. You're paying a term insurance wherever you are, that you're thinking that, okay, here's a coverage that I believe that I'm going to die within a certain amount of period. We don't know when you're going to kick the bucket, guys. Term insurance, yes, do pay out. But when you look at scope of things, it pays out very little compared to the amount of policy holder. Let me repeat. Term insurance pay out a lot less compared to most policy holder. I'm talking about 100 of you guys, you'd be lucky 2 or 3 of you guys getting paid out on term insurance. Because why? Company knows that you're willing to pay a cheap price and you're willing to cover that short period of time, and that is going to pay out if something happen. And that's the risk you take for paying that. So then I've got the other spectrum where you say, well, you know what, Shirley, how about this? I like the idea of term insurance, but I still want something like all my money back, right? In this case, this one person said, well, can I have my money back? Yes, you can. So remember that bicycle that I sold you on? So now you get this electric bike, right? And I said, okay, you want more? I go, I want speed. I want a lot more than this thing. So guess what? We're going to upgrade your term insurance to a thing called return on premium. Meaning, that return on premium, remember that 20 years? The electric bike that you pay like $50? I'm going to say to you, how about this? For that, if you want all of your money back, I can give it to you. Instead of paying me $50, you now need to pay me $75 a month. If you want all your money back, you pay me $75 a month. I'll give you the same coverage. Exactly the same thing. It's a 20-year. You still got to die within that 20-year. No buts, no ifs. Or it could be 15-year. I don't, there's 15-year return on premium. It's 20-year. But understand, I'm not going to give you that special price of $50. You have to pay me $75. And if you live past $75, the good news is I made your wish come true. I will give you all your money back. That is called return on premium term. Now, kind of think in terms of, how when you go buy a camera or a bike, they said to you, hey, do you want a warranty on the bike? Is this warranty, if it breaks down, if it doesn't function some way, we'll give you a new bike. Have you ever heard of that? You know how you go into a store, you buy a computer, whatever, they say, you want maintenance on this? Warranty. So I guess that's the best analogy I can use for return on premium term. Now, let's take that bike and you said, okay, you know what? I want to travel far. I want to travel a little further, Miss Shirley Lou. I want to go across state. I want to go across, give me a little dynamic. And I was like, okay, get rid of the bike. Okay? But it is now time to get a car. A car can get you a lot further in different places than a bike. This is where you come into life insurance, permanent life insurance. But guess what? Here's the situation with the car. Car can only get you so far, right? Life insurance, same thing. Term insurance, return on premium ends a certain time. Now, let's say you go into a permanent life insurance where this thing will last for a long time. Okay, but I could get you a car, but before your bike costs you $75 a month, the car, it's going to cost you a lot more. It's going to cost you maybe $200 a month, right? So now you come into this $200 a month. It's a lot more than your $75, right? But guess what? But listen to me. This thing is pretty cool. It will last forever to 115 years old. You don't have the policy that's going to end really quickly, or you don't have it's going to end in 20 years because, I don't know, I'm giving you this car that I think is pretty good. That's going to be able to get you to your different destination. It'll get you from here, from Virginia to California. But, I mean, it's a long drive, but you still can get there with a car, right? So I call it kind of like the kind of life insurance where it gives you 4%, guaranteed 5%. But here's the problem. What if you want that go across sea, like from here to Japan, from here to, Asia, from here to Europe? Guess what? Now you got to upgrade that car to a plane. Well, guess what? That's what I love about the life insurance. A life insurance with a permanent called the IUL, where it's kind of like a plane instead of a car. This thing can go across sea. This life insurance doesn't give you just death at any time. It'll cover you to 120 years old. It'll give you living benefit if you get hurt, get sick, any of those kind of things. At the same time, you want money? Absolutely. That money is yours inside the life insurance. And by the way, remember earlier you said to me, well, I don't get my money. What you do with my money? Well, guess what? This is your account. This account gives you an opportunity to grow your money in the market, but no loss. All that money is yours. And how about this? Let's distribute that money tax-free to your family. And let's give you that transportation. Go anywhere, any place, anytime, time and effort. So that is kind of my analogy when it comes to, do I get my money or not get my money? It depends. What you pay is what you get. So you can always reach out to my team, Shirley Lou and Associate. My can be reached is 703-608-1203. Always can Google my name, Shirley Lou, real easy to find. So until next time, I believe in we rise by uplifting others.